Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Viewing the Australian dollar, it posts further gains into the second consecutive day after holding above the key level of 67.10, while the US dollar index, which measures the greenback strength against a basket of 6 major currencies, declines further from 101.30 to 101.05. Traders are now processing Thursday's mixed economic data while awaiting Friday's crucial August jobs report. The ADP report released showed private payrolls increased by 99,000 in August, missing the 144,000 forecast, and down from 111,000 previously, marking the fewest hires in 3.5 years. Meanwhile, in a separate report, weekly jobless claims was slightly below expectations by 227,000 compared to the 31,000 forecast. This week data is unlikely to calm investors' concerns about the Friday's US non-farm payrolls report, which could impact the Federal Reserve's rate cut decision and signal whether the economy is heading for a soft landing or a downturn. Looking to the forecast to the non-farm payrolls, 164,000 new jobs for August is expected, up from 144,000 in July. However, a weak report could heighten recession fears, while a stronger report might offer some relief. Turning to the technicals, the RSI not quite fully broken to support a positive bias, but still keep an eye on these technicals and continue to adjust your risk management and monitor signals, just in case we see the challenge of 67.75 and a break there to lead on to the key level of 68.40. A break there will give us a view to 70 cents. Any pullback? Well, I still anticipate the market to hold around 67.10 and with the 60-day simple moving average seen around the level of 66.50-70 area. The euro was also stronger overnight as it pushes on towards 111.40-45 as the dollar slips, as I mentioned, to 101.05. Given the anticipated August US non-payrolls tonight, the market will be a little bit jittery, so do keep an eye on technical indicators and adjust your risk management accordingly because it's likely to get a little bit whipsawed. But overall, I do anticipate the US dollar will remain bearish and head on towards 99.5 as a broader target and look up towards the euro of 112 to 112.80 as a target. The dollar yen now falling further and closer to that key level seen at 141.60 to 142 figure, with the resistance intact at 144.45. A break of 141.60 does expect the price to accelerate and look down towards the region of 136 to 130. And as the market closes towards the end of the week, keep an eye on the weekly time frame as we could also get bearish engulfing candle or outside range day that supports the bias to the downside and the broader call. Sterling was also stronger overnight and still holding above that key level of 131.0510. While intact, I still look up towards 132 to 133 and reassess. As we turn to commodities, well, it would seem that this bullish hammer has supported further gains and recapturing the 2,500 handle and now looking further to challenge the topside key level, which is seen around 2,537 to 42. A break above this key area would see further moves and give a trajectory to 2,600 and therefore likely to trigger stop losses above there to support the accelerated move. Any pullback? Well, I anticipate the support seen around 2,510 to 2,498 and the key level beneath at 2,480. Turning to oil, as the market sits towards the December 2023 lows, we've got an inverted hammer and therefore could see the market eventually rebound with bullish divergence coming in slightly here. I do anticipate a rise up to 69.80 and away from this key level to 68.60 and maybe on to 70 to $72 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report and I hope you enjoy the great start to the new weekend.